Hi everybody, Russell here. Let's get right into it this week. Okay, so first thing first, click on viewers and you'll be on the viewers home. And then what you want to do is you want to click on watch list viewer. So either here, or if you prefer, you can click in here. For argument's sake, I'll click here, watch list viewer. And you've all got this group here entitled overview watch lists. I've asked the team to put in budget stocks 2020 stocks to watch. Okay, now the team might change the name slightly, but if you look here, you can't miss it because it'll be one of 4 different watch lists within that group. So this is the name proposed at the moment. Now if I come into here, right click, auto fit all columns, so it's nice and neat. Make sure you're displaying all of the stocks. Okay, so you can see here a total of 39. So what we did there is we went across all the different picks by all the different experts out there. All right. Bloomberg and Morgan Stanley and a few others there. We collated all the different picks noted by the experts out there and put them into a watch list. And this is the power of Vectorvest. You can now be in control. You can put it all together and now you can start to make powerful and informed decisions. So what we're going to do is we're going to have a look at the bottom line to begin with. So if I come right down to the bottom here, watch list average, right click, and I can view the watch list average. And this is where it gets really interesting because if I change the layout, you see how I've got graph layouts here, I've got it in as a simple layout. And what I can do here is I can turn off the stop and the RT and just simply keep the EPS on. And I'll right click and I'll change the style here and I'll make it just jump out just a wee bit more. There we are. If I pull this back a bit in time, you'll see the earnings are going really, really well from about 212, 213. And then you can see the earnings. This is a 12-month leading forecast, and earnings have started to fall away. This is because of coronavirus, right? So a lot of companies' earnings are under pressure. And if those earnings continue to fall, of course, you'll start to see the share prices on average falling. So what we want to do is we want to take the picks from the experts there, and let's see if we can smooth out this earnings just a wee bit more. So the way I'm going to do it today, and this is the way I like to do it myself, have a look at this column here, GRT, earnings growth rate, GRT. If you get stuck in definitions, remember, right-click any stock, and then you can always view the full stock analysis report, and from there, you can get the definitions. If I scroll down over here, you'll see it's just below the comfort index definition there. GRT reflects the company's 1 to 3 year forecasted earnings growth rate in percent per year. Forecasted earnings growth rate. So, if companies are doing it tough at the moment with coronavirus, I'm interested in the companies that are currently forecasting to grow their earnings. And therefore, what I'm going to do here, I'm going to click on GRT. You see there, triangle pointing down, it's telling us, it's sorting it by descending order, and I'll click on it again until I get the triangle pointing up. So I've sorted it in ascending order. And you can see there at the top of the list there, you can see the negative earnings growth rate outlook companies coming up to the top of the list there. So I'm going to remove any company from my list where I have a negative earnings growth rate outlook. Now, because this will be a template, of course, you're not going to be able to delete that. So what you want to do here is you want to right click and make a copy. Okay, so right click, make a copy. Once you've made a copy, now you'll get that functionality. All right, so just doing that again. There we go. So I'll click on the first negative number here. You see it's highlighted. Then I'll scroll down until I get to the last negative number. Hold my shift key on my keyboard. Click on the last one there. This may differ slightly as of time when you're watching the recording. And I'll now click on delete selected. All right, so straight away I'm going to take out any of the companies with negative earnings growth rates. So a total there now of 13 are left. If I come down to the bottom here, let's right click and let's view the watch list average graph. And you'll see over here, very interesting. If I pull that back a bit more now in time, look at that. We've smoothed it out a bit. All right, sure, it's not perfect. You still got a bit of a crater there, but it's not as severe as what it was. All right, so these are the companies now that are forecasting positive earnings growth rate outlook currently. Look at that. Look at the price versus the value. It's slightly undervalued. Look at that. 34 versus 36. All right, so there's upside yet. And you'll see a little bit of a uptick there, just starting to kick in there. A little bit of an uptick on those earnings, time will tell, but we'll keep an eye glued on that to see how it takes place. Let's bring in two additional parameters. So add parameter, Vectorvest fields. Let's bring in our net profit margin. This is what we make per dollar of sales that we sell. So every $1 of sales on average across those stocks, we're bringing in 20 cents in the dollar. So let's make this jump out just a wee bit more. So there we go. You can see since, the start of the year, go back just a wee bit over here since the start of the year. Let's come back to January. You can see we've been under a bit of pressure, right? So there we are, start of the year, January. Net profit margin 24.6 cents per dollar. We're down to 20 cents in the dollar. So down about, 16, 17 odd percent. If we add in here, let's add in parameter, sales market capital, and sales in millions. All right, so there we are. Let's put this on and let's change the style, make it jump out a wee bit more here too. So there we go. Since the start of the year in millions, it was 4,818 million, and now it's 5,762. So sales are up nearly, 20 odd percent. That's pretty impressive. So sales are up 20%, but net profit margin's down a wee bit since the start of the year. Let's close out of here. The last check and balance I'm going to do now, let's select all these stocks. So click on the first one, hold your shift key down. You can select them all, for example, and then you can then select on graph selected, or if you want, you could have chosen graph all. So graph selected, and all I'm going to do here is I just simply want to now keep my eye on the earnings, EPS. And I'm just going to keep it around about that year mark. I'm just looking for evidence. Is the earnings about to start turning around or showing signs of it? Now, it's not to say that ServiceStream won't, but at this point in time, at the moment, it's under a little bit of pressure. So I'm just going to jot down the ones where it's under a little bit of pressure. All right, so look at that. Harvey Norman had one of its best quarters ever. Look at that, all that discretionary spending with all the additional money being pumped into the economy. So there we go, Harvey Norman, big beneficiary, as pointed out by the experts out there. So certainly not on the list there. Sort of big spike and then down it goes. I'm not quite seeing enough evidence of a decline at this point. Let's keep going here. BLD, no. Okay, definitely not for now because of the trend. So I'll note that one down. Wow, look at JB Hi-Fi powering up. All right, as covered last week, at some point, we'll start to see this turning around, but for now, it's under a little bit of pressure, at least from the 12-month leading forecast perspective. And what about this? MTS, yeah, it doesn't look, well, I don't know. It's debatable. It's sort of come up slightly. In fact, you know what? I'll keep it on the list just because we've just seen a bit of a pop over there. Premier Investment, great. HLS, a little bit of a mixed bag there. All right, at the moment, it's sort of bouncing around a bit there, and I'm not seeing it coming up just yet. All right, JHX, okay. KAR, KAR is under a bit of pressure. Okay, keep going a little bit more. No, FMG is great, and so is RMD. Okay, so all I'm going to do now is I'm just going to remove the ones where the earnings are still currently under a bit of pressure. So SSM, these are the ones we identified, BLD, CSL, HLS, and KAR. Let's delete those out. Okay, so the net effect is it didn't look bad, but I'm now drilling into a micro level. Let's come back down to the bottom, right click, view the watch list average graph. Wow, look at that now. Look at the earnings currently. Okay, and if I put on the value, it's nicely undervalued. Look how nicely undervalued it is now. Look at the net profit margin, 16 cents for every $1 of sales, just shy of 17 cents. So that's good margin, and it's coming up quite strong as well up here, you can see. And sales sort of growing from the start of the year, certainly picked up. They've sort of leveled a bit, sort of plateauing a bit, but still, that's okay. All right, so there it is. That looks pretty strong to me. Let's put on GRT. So that's where it all started. Remember, we identified GRT companies with negative earnings growth rate outlooks. Well, look at GRT here now. Right click, make an area graph. So good GRT, good sales, net profit margin on the rise, undervalued, growing their earnings. So thanks to Macquarie, Bloomberg and Co. They gave us a great starting point. We then put it into VectorVest, refined our watch list. There it is. There's the 8. Per the research that the experts out there have done, we've now got the power using VectorVest to refine it further. You're in control. You can take what others say and you can make informed decisions in seconds using the power of VectorVest. Hope you got a lot of value out of this. Until next week, bye for now.